Good afternoon, investors. You are now on KleverStock with me, Aninjaria, and I will be serving you the midday roundup with the latest market updates from this morning up until now. Kicking it off with the Bursa Malaysia updates. Bursa Malaysia opened mixed on Tuesday with the FEMKLCI slipping amid lackluster investor activity. At 9:05 a.m., the FEMKLCI eased 5.64 points or 0.34% to 1,674.68, down from Monday's close of 1,680.32. The benchmark had started the day 1.91 points lower at 1,678.41. On the broader market, gainers led losers 158 to 128, while 281 counters were unchanged. 2,082 remain untraded and 11 were suspended. Turnover total 101.17 million shares valued at 89.15 million ringgit. Rakuten Tracy Nemberhad's Vice President of Equity Research Tong Pat Leng expects the benchmark index to gyrate within a range of 1,675 to 1,685 with a view to breach the 1,700 threshold soon. He added, "We remain hopeful that the solid performance by blue chips may eventually encourage liquidity to cascade down to the smaller cap space." At the moment, we note that retail investors remain sidelined in the absence of catalyst. Among heavyweight stocks, RHB Bank added 1 cent to 7 ringgit and 74 cent. 99 Speedmart rose 2 cents to 3 ringgit and 84 cent. TNB and Hong Leong Bank were flat at 13 ringgit and 74 cent and 22 ringgit 72 cents respectively, while Maybank declined 6 cents to 10 ringgit and 50 cent. CIMB shed 9 cents to 8 ringgit and 15 cent, and Public Bank trimmed 1 cent to 4 ringgit and 55 cents. On the most active list, Inside Analytics jumped 7 cents to 1 ringgit and 53 cent. MMAG and MRCB were half a cent higher at 7.5 cents and 39 cents respectively. Tanco and Centauria were flat at 1 ringgit and 18 cent and 2 cents, and Oxford Innotech fell 1 cent to 28.5 cents. Among top gainers, LPI Capital rose 22 cents to 14 ringgit and 80 cent, while Spritzer, Sunway Construction and MNRB each gained 4 cents to 2 ringgit and 70 cent, 5 ringgit 83 cents and 2 ringgit and 20 cents. Top decliners included Nestle down 90 cents to 114 ringgit and 80 cent, Malaysian Pacific Industries 48 cents lower at 31 ringgit and 2 cent, Petronas Dagangan 20 cents easier at 19 ringgit and 84 cent, and Westport's down 11 cents to 5 ringgit and 55 cents. Moving on to our local currency and foreign exchange. The ringgit opened marginally higher against US dollar on Tuesday as investors assessed the United States Venezuela situation, with an early flight to the greenback proving short-lived amid largely contained geopolitical risk. At 8 a.m., the local currency edged up to 4.0650 or 4.0745 against the greenback from Monday's close of 4.0695 or 4.0745. IPPF Sdn Bhd Director of Investment Strategy and Country Economist Muhammad Siddiq Jantan said that as risk sentiment stabilized, capital flows rotated back into emerging market currencies and higher yielding assets. He said overnight, the US dollar was initially supported by geopolitical headlines and global central bank signals, but the momentum faded. The US dollar index slipped 0.17% to 98.26 by late trading, leaving it to only marginally higher year to date. He added that the ringgit's gains were reinforced by a rebound in the Asia dollar index, reflecting renewed investor appetite for emerging market currencies as risk tolerance improved. Despite the early uptick against US dollar, the ringgit traded lower against a basket of major currencies. It weakened against the Japanese yen to 2.5958 or 2.6020, fell versus the British pound to 5.5012 or 5.5140, and eased against euro to 4.7626 or 4.7737. The local currency traded mostly higher against ASEAN peers. It edged up against the Indonesian rupiah to 242.8 to 143.5, firmed versus the Thai baht to 12.977 trillion to 13.0617, and rose against the Philippine peso to 6.87 or 6.90. However, it slipped against the Singapore dollar to 3.1686 or 3.1763. Now for some local economy news. Prime Minister Datuk Seri Anwar Ibrahim's announcement on strategic direction and institutional reforms further strengthens the confidence of industry players, the public and investors in national policies, said Finance Minister Second Datuk Seri Amir Hamzah Azizan. He said the Prime Minister's announcement yesterday aligns with Madani economy framework, particularly in sustainably enhancing the country's revenue to remain competitive amid global economic uncertainty. It also focuses on strengthening governance through legislation, providing more efficient public service delivery, such as the adoption of artificial intelligence and digitalization to streamline processes and reduce bureaucracy. He said next is improving the status of the people through better social protection networks such as Sumbangan Tunai Ramah STR, cash contribution, Sumbangan Asas Rahmah Sara, and early schooling aid. This also includes inclusive economic empowerment for the micro, small and medium enterprises, MSMEs sector, and the Bumiputra community. He was commenting on Anwar's 2026 New Year message at the Prime Minister's Department Monthly Assembly yesterday. Amir Hamzah said this new direction can be achieved due to political stability and a whole new nation approach, namely close cooperation between the federal and state government, the people, industry players, civil servants and all stakeholders. Continuing with some Bursa securities update. Bursa Malaysia Berhad today announced updates on the new fees imposed by the Securities Commission Malaysia SC. In a filing to the exchange, the company said the updates follow the coming into force of the Capital Markets and Services Fees Regulation 2025 and the Securities Commission in Malaysia rate of levy of purchase or sales of securities and derivatives Order 2025, both of which took effect on January 1st, 2026. The announcement follows a letter received by Bursa Malaysia from the SC dated January 5, 2026, notifying that the company of the SC fees applicable to it. Pursuant to the fees regulation, Bursa Malaysia said the new annual fixed regulatory fee applicable to the exchange is 28 million ringgit. Under the levy order, the levy rates applicable to the purchase of sale of derivatives or contracts effected on Bursa Malaysia derivatives Berhad include a levy rate of 37.5% of the clearing fee as specified by the derivatives exchanged to be paid by a purchaser or seller in respect of the purchase or sale of derivatives effected on the derivatives exchange. It also includes a levy rate of 37.5% of the trading fee as specified by the derivatives exchange to be paid by a purchaser or seller in respect of the purchase of sale of derivatives effected on derivatives exchange. It added, notwithstanding with the levy order, there is no impact to the market participants on Bursa derivatives as the trading and clearing fee payable by purchasers and sellers of the derivatives contracts shall remain unchanged as specified by Bursa Malaysia currently. Bursa Malaysia will remit derivatives levy to the SC from the amount collected from the trading and clearing fees of the derivatives contracts for 3 years until 2028. Another update is on additional fees applicable to recognized market operators under Bursa Group. Pursuant to the fee regulation, include an annual fee of 0.3% of gross revenue earned from operating each regulated platform or 20,000 ringgit, whichever is higher, applicable to the Bursa Malaysia RAM Capital Senior Berhad and Bursa Malaysia Bond Senior Berhad, and a trading fee of 0.0075% of the total amount of sale and purchase of securities transactions on a recognized market applicable to BR Capital. Now, as announced previously on October 17, 2025, the total amount of SC fee payable by Bursa Malaysia to the SC will be capped at 35 million ringgit in 2026. 40 million ringgit in 2027 and 45 million ringgit in 2028, as confirmed in the SC's letter dated January 5th, 2026. The cap on the SC fee payable by Bursa Malaysia includes a limit on the derivatives levy to be paid by the exchange of 7 million ringgit in 2026, 12 million ringgit in 2027, and 17 million ringgit in 2028. Bursa Malaysia stated that it will continue to endeavour to manage its costs, including securing funding for relevant market development proposals from the Capital Market Development Fund to alleviate the full effect of the SC fee implementation. We'll now take a short break, but don't go away. We will return shortly with more corporate news developments. Welcome back to the Midday Roundup. Let's continue with some local corporate news updates. CGS International Securities Malaysia Sdn Bhd has appointed Khairi Shahrin Arif Baki as Chief Executive Officer's CEO and Alan In Wei Lun as Country Head, following its leadership transition announced on November 25th, 2025. In a statement, the brokerage said Khairi would lead its strategic businesses and local operations, while Alan would focus on regional and cross-border growth. Khairi said Malaysia's ASEAN Chairmanship and growth themes in digital technology, energy transition and healthcare brought CGS MY to several high points in 2025. He said, in 2026, we look forward to sharing progressive results of these activities as CGS MY continues to serve as an important gateway to connect and facilitate vital partnerships and capital flows to materialize Malaysia's high-growth, high-value economy aspirations. He said CGS MY's China ASEAN heritage positions the firm well to support Malaysia and the local businesses partnering with Chinese companies across sectors such as digital technology, renewable energy and artificial intelligence, spanning government to government, business to government and retail engagements. Khairi said CGS MY would continue to expand its financial literacy initiatives with new campaigns planned for the year ahead that would leverage strategies such as gamification of educational content to better engage youth and adults seeking foundational financial knowledge. As CGS MY's new CEO, Khairi will continue to drive strategic and operational excellence in CGS MY with strong emphasis on regulatory stewardship and market expansion. Khairi said, as highlighted in CGS MY's Navigating Malaysia report, we are entering 2026 on a solid footing. With our KLCI target set for 1,810, this is supported by Malaysia's low exposure to global tariff risk, favorable exemptions from US reciprocal tariffs within ASEAN, steady ringgit from a narrowing US-Malaysia interest rate differential, and stable policy environments. Alan, as country head, will lead growth across asset and wealth management, investment banking, private equity and cross-border opportunities, leveraging his extensive investment banking experience. Up next, we have some business news update. Domestic equity market participation remains resilient, supported by stable liquidity conditions and improving earnings visibility, according to Rakuten Trade Research. Against this backdrop, investors are becoming more selective, increasingly favoring companies with stronger fundamentals, clearer earnings trajectories, and sustainable business models. The firm said in such an environment, margin financing, when used judiciously, continues to serve as a portfolio efficiency tool for experienced investors, enabling them to capitalize on opportunities while maintaining disciplined risk controls. In line with this market shift, Rakuten Trade Sdn Bhd has reduced its Raku margin interest rate to 5.5% per annum from 8.5%, aimed at providing more cost-efficient, transparent and sustainable trading solutions for Malaysia's growing base of retail investors. The firm said that as market conditions become more dynamic and selective, retail investors are increasingly focused on managing trading costs, optimizing capital efficiency, and maintaining discipline in their investment strategies. Financing costs, being a recurring component for margin users, play a critical role in shaping overall trading outcomes. Rakuten Trade said the revised rate forms part of its broader effort to ensure margin financing remains a supportive tool for informed and responsible trading rather than a short-term incentive. Kamumase Mise, Chief Executive Officer of Rakuten Trade, said in a more fast-moving and selective market environment, investors are paying closer attention to the total cost of trading, not just market direction. By lowering our Raku margin interest rate, we aim to support active investors with improved cost efficiency while maintaining a pricing structure that is clear, predictable, and sustainable over the long term. Rakuten Trade noted that the adjustment reflects a deliberate long-term approach to margin financing centered on sustainable pricing and prudent risk management rather than reliance on tactical or promotion-driven measures. And finally, wrapping up, we have major corporate developments and deals across Malaysia. CIMB Group Holdings Berhad said its investment banking arm, CIMB Investment Bank Berhad, along with 11 other parties, has been served with a 1.38 billion ringgit lawsuit by sukuk holders of MEX Second Sdn Berhad. Sdn Berhad has said it has acquired 3 parcels of land in Selangor and Penang for a total consideration of 179.8 billion ringgit to strengthen its presence in key urban growth corridors. Glomac Berhad said its subsidiary Glomac AI Patha Sdn Berhad is disposing of 2 parcels of leasehold land in Puchong, Selangor to Sunway Kiara Sdn Berhad for 97.3 million ringgit. Apex Healthcare Berhad is said to be delisted and trading in its shares suspended from January 13 following the successful completion of a voluntary takeover offer by Famora Investment Holdings Pte Ltd. And last but not least, Engineer Gudang Berhad said it is disposing of a 1.9-acre industrial land with a factory and office building in Lai, Negeri Sembilan for 22 million ringgit in cash to Baba Products M. Sdn Berhad. Now that's a wrap from Midday Roundup with me, Ainu Jaria on KleverStock. Thank you for choosing us, investors. Stay tuned for our upcoming live stream programs coming soon.